Good morning, everyone, and welcome to the Sirius Report. Well, record high repos from the Bank of England to the digital euro. Many different things are happening going on in the European financial system, and it's something we have to take a look at today. Paul, as always, I want to thank you for being a part of this discussion. And which area do you want to start with?
Well, yeah, thanks for joining as well, Cam. It's always a pleasure. What we thought we'd do is start off with this thing to do with what is termed a short-term repo open market operation. Now, this figure has been creeping up since the start of the year. And in the last 7 days where the data is recorded, it's publicly available, by the way, the Bank of England allotted 62.5 billion pounds, which is about 80 billion US dollars. This was in 7-day funds in its weekly short-term repo operation. That was higher than the previous week, where it was about 61 billion pounds. Now, why is this significant? It's significant for the following reasons: because this short-term repo is aimed at maintaining control of short-term market interest rate. So what it allows is participants who are nameless, and we don't know who these participants or participant is, to borrow central bank reserves for a 1 week period in exchange for what is termed this high quality, high liquid assets, which presumably means US treasuries or gilts, which I wouldn't call any of these high quality or highly liquid anymore. But anyway, that's personal opinion. Now, that facility is priced at the bank rate. And what this also does, and this is the important part, it keeps short-term market interest rate in line with the bank rate by ensuring that banks don't need to pay above the bank rate for reserves in money markets. Now, why is that important? Because it tells us that either one or more institutions, now we can't speculate on who they are, and it would be extremely stupid to do so and reckless as to who those financial institutions might be. But they are going to the Bank of England basically because they need liquidity, and they don't want to go into the wider banking sector to get that liquidity because interbank lending clearly is strained. And by doing this, it stops the risk of a repo crisis, which we saw in 2019, which ironically we predicted would happen in the January of that year happening. And this is indicative of the fact that there is the risk of a repo crisis, and the Bank of England's trying to step in to prevent that happening. Now, people speculate who these institutions could be, and people may suspect it's a UK institution. It might well not be. It could be a European one. I very much doubt it's anyone in the United States. In fact, I would say categorically it's not. But what this obviously short-term repo, so-called open market operation, or OMO, is, it has effectively, in principle, allows an unlimited supply of central bank reserves to make sure that banks' demand reserves can continue to be met. And part of this is because QE is unwinding. Well, notionally QE is unwinding. It's back to the old what's QE when it's not QE. But in principle, that's the case. So effectively, they're just trying to backstop any serious problem that might manifest itself inside the banking system in terms of interbank lending, to prevent the risk that those repo rates suddenly spike way in excess of the bank rate. Now, the question is, what happens in the coming weeks? Does this figure continue to rise? If it does, then it indicates more and more stress inside the financial system. Somewhere in Europe, whether it's the United Kingdom or somewhere else, as we say, we don't know, But this is extremely important. It's been increasing steadily, actually, since May of last year. So it's been going on for nearly 12 months. I wouldn't say these figures are a huge problem at this point in time, but it is £62.5 billion or $80 billion dollars, so it's nothing to sniff at. And that's why we thought we ought to mention it today, because it's one of those things that often doesn't get mentioned. People don't see it, they don't understand why it's a problem. But this is a serious problem in the making, and this could rapidly get out of hand very, very quickly. Repo crises don't generally happen over a very long period of time. Yes, we could see problems coming, but when the problem strikes, it's almost instantaneous. So this is one of these things we'll see in the coming weeks, but this could blow up very rapidly. It's not something that's a long way off in the distance if it does, and that's why we thought we should mention it today.
There's, one of the more interesting things in this is that in the US, the reverse repo market has been winding down, while the British, what we see here, is starting to kick into high gear. They're almost on the opposite ends of the scale of each of their different markets. Now, one thing I was going to ask, and I could be completely off base here, but it was about March or May of last year when officially LIBOR switched over to SOFR for short-term rates, interbank lending. And it was that time, it was like early May, when the repo started really accelerating and increasing here at the Bank of England. And I wanted to get your quick thoughts on that.
Yeah, it's one of those things. It might absolutely be relevant. I mean, there always can be coincidences. Let's not pretend otherwise, but it might well be linked to that. I mean, the timing kind of suggests it, so maybe indeed that is a very valid point. But it's certainly something to consider, and can be a bit difficult for us to prove categorically. But I think I remember going back quite a while ago, we talked about when LIBOR got phased out, what the potential risks would be. Interestingly, they seem to have got around a lot of those problems, even though so many institutions were not even remotely prepared for it. But at the end of the day, there's always ways to deal with nasty, irritating problems in the financial system. But no, you could well be correct, Ken.
With that being said, we also are seeing more and more, especially with the new administration, a rapid increase to try to disconnect Europe's financial and banking system from the West. And there was a new, what was it, article or talk from the European Central Bank economist Philip Lane, who talked about the fact that Europe is too tied into the payment providers and payment systems of the US, and we need to find a new way to disconnect that, dislocate it. And one of the things that they pointed out as being the potential for this is the need to accelerate the digital euro.
Yeah, I mean, this is a huge story because, I mean, for the European Central Bank chief economist, Philip Lane, as you said, Ken, to come out and say Europe's dependence on American payment providers leaves it open to economic coercion really is about as damning a statement as you can make. I mean, talk about the relationship between Europe and the United States falling off a cliff edge. Well, for someone to make that statement, they don't make it lightly. There is no doubt Europe is looking at all aspects of its relationship with the US. And the claim is, I would attribute none of this concern to Visa and MasterCard, but they do process around 2/3 of card payments in the Eurozone. I mean, and I don't see why Visa and MasterCard would do anything, but if the United States arguably told them to do something, They would do it, hence why they were told to leave Russia, and they did so. But for Lane to come out and basically say, look, Europe's reliance on all these foreign payment providers like Visa and MasterCard is reached very high levels. Therefore, that exposes us to risks of economic pressure and coercion and has implications for our own autonomy, limiting our ability to control critical aspects of our financial infrastructure, meaning this is all relates to SWIFT. That implies that they're extremely concerned that the United States could come out and implement some kind of sanctions or measures that could cause huge damage to the European Union. Now, ordinarily, you would sit there and think, why would they do this? I mean, I'm not sure this relates as much to the fact of what the United States might deliberately do and in respect of coercion or whatever. I think this might as well be, we're very concerned about the future of the US financial system. We're very concerned about what could happen to SWIFT. We're very concerned about payment systems, full stop. And therefore, we're going to have to change accordingly. So, hence the acknowledgement as well that there's this big shift towards what he termed multipolar monetary system with all these new payment systems and currencies, he said, which can have significant geopolitical influence. So, therefore, on that basis, this factors into the thinking. And I know people have very, very different perspectives on the digital euro. We're not going to get into that specifically today, because already, just to counter a lot of the feeling of what this means, they've come out and basically said, and it's absolutely true, that retailers like you and I and Ken would have to have very limited access to the digital euro, because if we all pulled our money out of banks would collapse, and in no way, shape or form can they allow that to happen. I know people will think they will deliberately do this. This is, absolute nonsense. People need to get these ideas out of their heads, because it's that kind of thinking which strays into all this ridiculous entertainment area of social media as opposed to reality. Now, the other interesting thing, and he makes the point that it is true, that national card schemes have been entirely replaced by international alternatives in 13 of 20 Eurozone countries. Now, this is absolutely their reasoning why they've pushed the digital euro sooner. They think this would be a solution to counter all those risks and ensures the Eurozone retains control over its own financial future. And the truth is, if they roll it out, and people will disagree, but on the basis of how it will be rolled out, they're absolutely correct. It would give them autonomy. It would reduce the costs of transactions. Transactions would be a lot quicker. A digital euro would actually function a lot like cash. People could then make direct retail payments. They wouldn't need a card service provider. But as I said, there has to be limitations, because if they don't, they'll blow up the financial system in Europe. So you could hold these funds. And then the funds could then be transferred to a seller, and you wouldn't have to go through Visa, MasterCard, or anything else. That is what is largely driving the digital euro from a European Central Bank perspective. Also, it's worth noting, this also applies to the wholesale sector, which is where the majority of these transactions will take place. Because if it can be done outside SWIFT, outside these non-EU card providers, then that would be, that's less applicable to wholesale. But the point is, they'll be able to operate with autonomy. And I think, as much as anything, this suggests concerns that the Western financial system, SWIFT as it exists now, is creaking and there's going to be serious problems. And if we have a digital euro, then the European Union could continue to function independently of any financial crisis that may rear its head, be it in the United States or, for that matter, in the United Kingdom. But if you look at this digital euro, it's been in the works for years. EU legislation has been a huge problem in allowing it to be adopted. This is a step which is not going to be something that's everybody's going to be forced to use or anything like that. Absolutely not. But for me, the overarching argument for using this is to get out of the existing financial system. Whether you think you're going to be coerced and Trump's going to start putting sanctions on Europe or tariffs on Europe or anything, whatever else you think he's going to do, I think as much as anything, they just want an alternative that says we can operate in the Eurozone area without having access or the need to access SWIFT, which we clearly have huge concerns over. And I think it also relates to a financial crisis in the future, which might mean it's far better to be using the digital euro, wholesale or retail, than trying to utilize a SWIFT-based system. And I think that's an important point. There'll be people who disagree with this, but in the future, you'll see what unfolds and the reality of it. And I think that's going to be an extremely important point at that time when people will see what being informed is as opposed to being entertained.
Absolutely. And, that was really, in essence, a number of things I'm going to point at real quick that came to that ultimate conclusion. We know that the United States, at least the Trump administration, the previous administration did not do this, but the Trump administration is trying to pull itself and wean itself away from the old vassal system post World War II that the U.S. and Europe had. Now, I think Europe is responding critically and saying, you know what, if the U.S. isn't going to be with us, then we need to stand up for ourselves. Defense strategy in regards to NATO, in regards to funding our own future, et cetera. Even with the tariffs, suddenly looking at the U.S. not as a partner or an ally, but as a competitor and adversary. So what's the or final thesis? It's not necessarily the military coercion that the U.S. had over Europe, but it goes back to the Bretton Woods that is now where it was a boon and a benefit coming out of the war and the rebuilding. Now it's becoming an anchor. And I wonder, and you have to wonder, as the multipolar world is evolving, and maybe not as fast as some people initially, thought it might do, with all these nations that want to dump the dollar and hate the U.S. and their actions, and join together in the BRICS and the SCO and all the different organizations. Maybe Europe is suddenly saying, you know what? Russia was cut off from SWIFT, and they've been able to function quite decently, not using the dollar and being restricted from use of the dollar. We're Europe. We have our own currency, at least in some capacity, whether the euro is as stable as they wish it would, but we can do the same thing. And, when you talk about multipolarity, if Visa has already connected with Alipay in China and they work as a global partnership, multipolar monetary system, then why shouldn't Europe, through a digital euro, disconnect themselves from having to use the dollar as the primary currency of commerce, create their own digital euro, then create their own payment systems, and then they get to choose who they connect with in the multipolar monetary system, whether it's China, whether it's even Russia once the conflict's done, whether it's whomever. And that way they can dictate terms, as you pointed out, for the continent, rather than have the U.S. dictate terms for them. Because as long as SWIFT is a Damocles sword sitting over Europe, then the Fed, the dollar, all these different systems will inevitably dictate Europe's future.
Yeah, just a final point to make, Ken, is and I've heard enough noises coming out of the US that there's a ever-growing consensus that they feel the European Union's a spent force, it's finished, it's going to collapse, it's going to fall apart. They're almost wanting to, in some senses, create this division between them to separate themselves as much as possible from the European Union. And therefore, on that basis, if that perspective is growing and has legs and is reality, there's no doubt people in Europe are picking up on this and also would perceive this to be a reality, which might also explain, in part at least, why we're seeing these statements coming out about coercion, etc., because they're feeling the United States could be about to dump them into the long grass as well. So that's something else we shouldn't lose sight of.
Yeah, and if you think about it, what is something that the Trump administration has been big on? It's been big on pursuing this crypto stablecoin system. Tether, I mean, there was a story that came out. Tether owns more treasuries than Canada, Taiwan, and a number of different, places. So the U.S. is integrating towards these crypto stablecoins, and Europe has been fighting crypto immensely, wanting to keep that bit of sovereignty over that. So there's a number of different facets that I can see. Creating that digital euro will give them at least a little bit of not just security but independence as the U.S. tries all these different types of scenarios to hold on to dollar hegemony.
Yeah, absolutely.
Anyway, Paul, thank you as always for your insight and for being a part of this discussion.
Yes, and likewise.
And to everybody here at the Sirius Report community, thank you for all of your support. Don't forget to like, share, subscribe, comment, send this out to anybody you think it might be important to. And until the next time we get together, have a great day.